So I don't look at this as a significant move in the sense of undoing a lot of what the Fed has done over the past several years. But the Fed is seeing a number of signs on the horizon that are related to slowing global growth, rising trade tensions, not only with the U.S. and China, but around the world. And it's also failed to hit its much discussed 2% inflation target. Inflation's been running below a level that the Fed is comfortable with. And so by trying to lower interest rates very slightly, it believes that it's going to get closer to its goals of keeping the U.S. economic expansion going and perhaps get a little closer to its inflation target. I think right now we can say that we don't see firm signs of a recession in the United States. The economic expansion in the U.S. has entered its 11th year. The old saying goes that expansions don't die of old age, and then the punchline is that central banks kill them. And indeed, this is a case where there is some backpedaling on the part of the Federal Reserve. The weakest parts of the U.S. economy right now really involve manufacturing and the housing market, but those aren't necessarily flashing red signals. It's more of a caution, yellow signal. And the Federal Reserve simply wants to try to keep this 11-year-old economic expansion going, and it thinks by essentially slowing the pace of tightening that it will help us to get to that destination. One of the reasons that there is a concern about the Fed is cutting rates right now is that they are now essentially beginning to unload some of their bullets from the monetary policy holster that they would use in the face of a more dramatic financial crisis or downturn. And so while Chairman Jerome Powell is essentially saying, well, you don't necessarily know that to be the case because we might raise interest rates down the road, many investors are betting, of course, that the next couple of moves on the part of the Fed will be to cut interest rates, and that means that they'll be losing ammunition, not gaining it, for guarding against a future downturn. Certainly, President Donald Trump has generated a lot of attention to the pressure that he's attempted to apply to the Fed to cut rates, to essentially give him more breathing room with the U.S. economy, and as he has said, essentially stoke the stock market further. The reality is that the Fed does not have as part of its mandate either to please the president or to certainly send stock prices higher. And so I'm of the opinion that the Fed is acting on its own, taking the steps that it believes necessary to help the U.S. economy, essentially the steps to help all Americans through a more robust U.S. economy. It just so happens that that does coincide with what President Trump has been pressing for. The other part is that if the president really is trying to press the Federal Reserve to boost the stock market in the Dow Industrials average by 10,000 points, I think that's a bit of a bridge too far, and he may never be pleased with what the Fed is actually going.